Welcome to True Finance, where your financial future begins with clarity and confidence.
Have you ever found yourself in the whirlwind of rising prices, job insecurities, and wallet worries? That's the aftermath of the interest rate tango. Wondering what these interest rates are and why they wield such a dramatic impact on our lives. Think of interest rates as the conductors guiding the economic orchestra. When they rise, it's like turning up the volume on a financial symphony, affecting everything from mortgages to your daily cup of coffee. In this video, we're unraveling the secrets of interest rates and their role in managing inflation. By the end, you'll not only understand the complex web of finance, but also grasp how it influences your everyday decisions. So buckle up for an enlightening journey where financial intricacies meet real-life implications. Now let's break it down into 3 acts: the introduction, the influence on consumers, and the impact on businesses. Each act has its twists and turns, and by the end, you'll see why interest rates are the rock stars of the financial world. Before we dive into the nitty-gritty, let's set the stage. Imagine interest rates as the heartbeat of the economy, pulsating through the veins of every financial decision. From borrowing a few bucks for your dream car to saving up for that vacation, interest rates are the rhythm that shapes your financial melody. Now, imagine inflation as the mischievous player in this orchestra, threatening to throw the entire composition out of tune. Today, we're exploring how the rise and fall of interest rates choreograph a delicate dance with inflation, affecting us all. Where it all started. Now, have you ever borrowed money and wondered why you have to pay back more? That extra chunk is the interest rate, my friend. It's like a high five to the lender for trusting you. Now imagine this on a grand scale, central banks doing the same with commercial banks. They're the puppeteers behind interest rates, pulling strings to control inflation. It's not just about numbers, it's about the pulse of the economy. So, next time someone mentions interest rates, think of it as the heartbeat of your financial world. Let's demystify this. Central banks, the big bosses of the financial realm, use interest rates to keep inflation in check. Inflation is like that sneaky thief making prices climb. So, when things get too pricey, central banks raise interest rates. Why? Because it's like telling commercial banks, hey, if you lend, make it worth your while. This tweak creates a ripple effect, from mortgages to the price of your daily latte. It's a balancing act, and interest rates are the tightrope. Now, let's dive deeper into why inflation is the villain here. Think of it as a mischievous gremlin sneaking into your daily expenses. Prices rise, and suddenly, your paycheck feels like it's on a diet. Central banks play superhero by adjusting interest rates. Their way of saying, not on our watch, inflation. It's a dynamic dance where every move impacts your wallet. Imagine this. You stroll into your favorite coffee shop, and suddenly, your usual brew is a bit pricier. That's the aftermath of central banks nudging interest rates. They do it to keep the economy in check, but the real heroes are the ones adjusting their budgets to accommodate these changes. So, the next time your barista hands you a receipt with a slightly higher total, remember, it's the economic dance of supply, demand, and interest rates. Take a look at the housing market, a playground where interest rates play a crucial role. When central banks tweak rates, it sends a ripple through mortgage rates. Imagine you're a first-time homebuyer. Suddenly, your dream home comes with a higher price tag. It's not just about the house. It's about how every percentage point impacts your monthly payments and ultimately, your lifestyle choices. The interplay of interest rates and your homeownership dreams. That's the real-world impact we're talking about. In a nutshell, interest rates aren't just numbers on a screen. They're the guardians against the inflation monster. So the next time you hear about rates going up, remember, it's the economy's way of saying, we've got this. It's like a financial superhero swooping in to save the day. Now let's move to Act 2, where we unravel how these rate changes hit you in the wallet. If you like our video so far, don't forget to hit like and subscribe. Influence on consumers. All right, let's talk about you, the consumer. Imagine having a mortgage and suddenly, interest rates do a little dance. In some places, your mortgage rate might shimmy with the central bank's moves. That means more of your paycheck goes into the mortgage pot, leaving less for your weekend adventures. But wait, fixed rate folks, you're not off the hook. Even if your rate is steady, the indirect impact hits hard. When rates rise, new buyers face pricier mortgages, triggering a drop in home values. Translation: your home's worth takes a dip, and so does your spending mojo. Let's zoom in. If you're in a place like Finland, where variable rate mortgages are a thing, brace yourself. When central banks crank up rates, your mortgage payments follow suit. Less cash in your pocket means fewer spontaneous splurges. Now, for our friends in the US and Canada with fixed-rate mortgages, it's not a direct hit, but hold on. Rising interest rates make new mortgages expensive. Result? House prices slide, and if you own a home, that's a hit to your wealth. The economy becomes a game of dominoes, and every move affects your wallet. Now, let's explore the psychological impact. Imagine you're planning a big purchase, like a shiny new car. Suddenly, interest rates take a hike. Your dream car's financing becomes a bit steeper. It's not just about the numbers, it's about the hesitation that creeps in. Consumers pump the brakes on major spending, reevaluating whether that dream car is still within reach. Interest rates, in this case, aren't just financial digits. They're decision makers, influencing your buying behavior. Consider this scenario. You're eyeing a sleek new gadget, and the price tag is within your budget. But here's the twist: interest rates rise. Now, that gadget comes with a slightly higher installment plan. It's not a deal breaker, but suddenly, your decision-making process shifts. Interest rates sneak into your choices, making you weigh the pros and cons of that impulse purchase. And just like that, the economic rhythm impacts your day-to-day decisions. Now, think about the impact on your vacation plans. You've been saving up for that dream getaway, and then interest rates decide to take a detour upwards. Suddenly, your budget feels a bit tighter, and those extra vacation splurges become a luxury. The interplay of interest rates isn't just about mortgages and loans. It's about how every financial decision, from a weekend escape to a tech upgrade, is subtly swayed by these economic fluctuations. In the grand consumer saga, higher interest rates mean tighter budgets. It's not just about pinching pennies, it's about the entire economic ecosystem. Whether you're on a variable rate roller coaster or enjoying the stability of a fixed rate, the interest rate ballet influences every financial move. Now cue Act 3, where we reveal how businesses get tangled in the web of rising interest rates. The impact on businesses. To our businesses, welcome to the hot seat. When interest rates go up, the cost of borrowing follows suit. Imagine trying to expand your business when the bank tells you, "Sorry, rates are up." It's a tough pill to swallow. The domino effect kicks in. Fewer investments, fewer jobs, and you guessed it, lower wages. That's a recipe for cautious consumers, tightened purse strings, and a slowdown in the economic dance floor. Zooming in on businesses, higher interest rates mean higher costs. Borrowing becomes an expensive affair, making expansion plans feel like a high-stakes gamble. Jobs might become a scarce commodity, and when wallets slim down, consumer confidence takes a hit. Picture this: businesses hesitating to raise prices, consumers thinking twice before swiping their cards. The result? A delicate dance where everyone is cautious, waiting for the economic fog to clear. It's like a financial tango with interest rates leading the steps. Now, let's explore how rising interest rates affect the global dance floor. Imagine you're a small business owner relying on exports. Interest rates climb, and suddenly, the cost of financing your international shipments rises. It's not just a local tango, it's a worldwide waltz. Your profit margins get slimmer, and the competition gets tougher. Interest rates in this scenario aren't just economic levers. They're global players, influencing the competitiveness of businesses on the international stage. Let's dive into the restaurant scene. Higher interest rates mean the cost of running that cozy cafe around the corner increases. Suppliers adjust their prices, and suddenly your favorite cup of coffee comes with a slightly higher bill. It's not just about the cafe owner adjusting to the new normal, it's about the interconnected web of businesses adapting to the economic rhythm. The impact goes beyond the balance sheets. It's about how every business decision trickles down to your daily choices. Consider this scenario. You're a tech startup looking to secure funding for that groundbreaking project. Interest rates spike, and investors become a bit more cautious. Your dream of revolutionizing an industry suddenly faces a financing hurdle. It's not just about the brilliance of your idea. It's about how the economic backdrop influences the willingness of investors to take risks. Interest rates in this context become more than numbers. They're gatekeepers to innovation and business growth. So, businesses, in this intricate waltz of interest rates, it's not just about profits and losses. It's about the pulse of the entire economy. When rates rise, the economic heartbeat slows, and every move becomes a strategic play. It's a delicate balance, a financial tightrope, where even a slight misstep can send shockwaves through the market. And there you have it, the symphony of interest rates, influencing consumers, guiding businesses, and orchestrating the economic melody. And there you have it, the backstage pass to the mesmerizing world of interest rates and their dance with inflation. From the basics of borrowing and saving to the strategic moves of central banks, we've unraveled the threads of this economic tapestry. It's not just about numbers and percentages. It's about how these financial maestros shape the world around us. So, next time you hear about interest rate hikes, remember, it's not just about the economy, it's about your daily life. If you enjoyed this financial journey, hit that like and subscribe button for more insights. Until next time, stay financially savvy.
As we close today's journey through the landscape of financial wisdom, we extend our heartfelt thanks to you, our dedicated viewers, for joining us. Please like and subscribe so that we may continue to bring you the best financial education.